Our next guest joining us to talk about fintech, banking, AI, and crypto, and what all these things could look like once President-elect Trump takes office next month. I want to welcome Jackie Reese. She's the chair, CEO, co-founder of Lead Bank. In the past, she's had roles at Block, Yahoo, Apex Partners, Goldman Sachs, and so much more. She currently sits on the boards of Affirm, Endeavor, and a whole bunch of other companies. As a former Alibaba board member, you're everywhere. You touch everything.
Just banking.
Okay,
Just banking.
Well, let's talk about banking, because I think there's a big question about what's going to happen to legacy traditional banking under this Trump administration, but also what's going to happen to the sort of the fintech next generation version of banking and crypto and all of it.
Well, I think with crypto, that's probably the most interesting thing, because you've seen these momentum moves in the crypto market. First, when ETFs evolved, with BlackRock announcing their crypto ETF, and now everyone expects there to be a market structure bill to settle the rule of law around crypto and stablecoins. And I think that'll be incredibly helpful to the market. And fintech, I think it's been a long evolution over the last 10 years, where you've seen a wholesale change in the way banks show up now in people's pockets,
right,
and try to make transactions easier for consumers and businesses. And I think any of that evolution,
so would you be
amazing.
Would you be long all sorts of crypto? Would you be long all sorts of fintech? Would you be short legacy banks and Visa and MasterCard? I mean, how do you think about sort of the future going forward?
No, I think banking has basically been unboxed and shows up in people's pockets. It shows up in people's transactions. It's one of the largest sectors in the economy. And I think where all money is largely digital at this point, 90% of the money that is in the U.S. economy is largely digital. I think the evolution of crypto will just continue that evolution.
So who are the winners, though, but also who are the losers?
Well, banks have proven to be part of the financial structure of the crypto market. I think you've seen them take on crypto, whether it be ETFs, whether it be a market trading.
Well, so maybe the legacy guys eat the fintech guys.
Well, it's hard to define what fintech is today, because everyone has such strong technology that I think you've seen legacy banks take on the business and try to evolve into a more technology-first position.
What advantages do fintech companies, original fintech companies, have if the legacy guys are doing the same things from a tech perspective?
Fintechs have historically started with first principle thinking. They've built with scale, they've built with efficiency, and that has enabled them to, in some cases, catapult past legacy banks and force the issue of whether consumers are able to have a user interface that's easy, that's beautiful, that's efficient. And so you've seen tech companies like Square, like Affirm, like Nubank change the paradigm of how banking is done for consumers and businesses. I think that kind of thinking, and it's applied to the U.S. government now in the upcoming administration, it's applied to technology companies and to banks, and I think it'll continue to make the experience for all of us much better.
I want to show you a clip, by the way, because there's a little bit of interesting controversy around crypto and fintech. I don't know if you saw Mark Andreessen.
Yep.
Talking about debanking.
Yes, I did.
Debanking with Joe Rogan. Take a look at this.
1.0 was 15 years ago against the pot and the guns. 2.0 is primarily against their political enemies and then to their disfavored tech startups. And it's hit the tech world like we've had like 30 founders debanked in the last 4 years.
Really?
Yeah. It's been a big recurring pattern.
30.
But this is one of the reasons why we ended up supporting Trump. It's like we can't live in this world. We can't live in a world where somebody starts a company that's a completely legal thing and then they literally get sanctioned, right, and embargoed by the United States government.
I want you to go down the rabbit hole with me, just for a second here.
I'm happy to, because I don't believe this to be true.
So you don't?
No, not at all. So I run a bank. I build fintech infrastructure. I work with both crypto companies and technology companies. And what I have seen is where banks have chosen not to invest in being a part of crypto infrastructure, it's because they don't have the skills, one. So they've decided that they can't invest in the compliance technology in order to bank the market. Or two, they don't have enough depth that they decide they're going to keep some of those players in the market, and so they pull back. And then the last piece is there are many companies in the crypto space in particular that hadn't grown up over the last few years. Those companies hadn't done the work to build the compliance teams, the BSA teams, the AML teams. Those companies
anti-money laundering for those playing at home
were largely debanked and asked to actually do the work in order to be a legal part of the banking system.
So you think this argument that they were debanked for political purposes or something else not true?
I don't think it's true. And
you
in
think
fact,
you think it's for compliance reasons?
I do. And maybe there was a particular issue around a person. I think, all of that, you got to do your diligence and make sure you understand what's going on in that person's profile and the risk. And so maybe there are examples that are extreme.
Yeah.
But I don't think it's an industry issue. And while I've seen a lot of the crypto industry come and work with us, for example, and work with JP Morgan as another example, or Bank of New York Mellon, there are large institutions that have banked the industry.
What about the collapse of Silicon Valley Bank and then maybe some of the fallout that came from that with other banks pulling back too? I wonder if that accounts for
it.
Some
Absolutely
of it
does. And there's two other banks that were part of the crypto industry that also... Signature and Silvergate. So you take all of those accounts at once and now need to move them across the country in order to get banked.
But
with a lot of startups.
You don't believe when the FDIC took over those banks, for example, that was some kind of debanking program, right? Because there have been these allegations, which you've heard, from even people like Barney Frank, who I think was on the board of Signature at the time, suggesting that the company was solvent, the bank was solvent, and that this was sort of an unnecessary move. And he believed, the implication maybe was that there was some political shenanigans going on. I don't know.
The reality of why the FDIC chose not to support or support in different ways, I can't begin to get in the minds of regulators. I can tell you that the companies that banked with those institutions had options. And if they chose to do the work around AML, BSA, they had choices. And we were one of them, for example. And so I'm not sure I believe any of that. And I've seen plenty of circumstances where these companies are banked, from the JP Morgans on down to folks like us.